welcome to the SaaS Revolution Show. Stephen McIntyre, partner at Frontline Ventures. Welcome, Stephen.
Hi, Alex.
Where are you calling in from? Is it sunny Dublin?
Sunny Dublin, that's right.
Pubs have just opened.
Yeah, they opened last Monday, although I've got young kids now, so I only see a pub every once a year, maybe.
Yeah, I know the feeling. I know the feeling. I don't attend the local pubs, and I guess the only time that I do go to the pubs, especially the ones in Dublin, is when I'm at SaaStock, which is not happening this year. But I've got a bit of FOMO, having chatted with Des Traynor the other week at SaaStock Remote about Grogan's reopening. So that's the first pub.
That's a good one. That's a good one.
Yeah. But we're not talking about pubs today, Stephen, although we have started about it. They're opening in the UK tomorrow, but we are going to talk about many things today. But first of all, I really want to get to know and help the audience understand who you are, and then who is Frontline Ventures.
Sure. Well, I was born and raised in Ireland, trained as an engineer. Spent about 10 years, all of my 20s really, living in other countries. I went to grad school in the US when I was 21, and really I've kind of loved the US ever since, and that's been a big theme in my career since then. I'd love to have stayed in the US. Actually, I was kind of kicked out, my visa expired, and then I went to the UK, and then I started my career as an engineer and ended up traveling all around the world for quite a few years, rolling out mobile phone networks. And I was living in Mexico and Portugal, UK, I was in Tunisia, Scandinavia, all over the place. And then eventually went back to the States again, did an MBA there, and then that led me to Google. So I joined Google in 2005, and that was really the first time that I experienced blockbuster growth, just blowing the doors off every quarter. And like pretty much anybody else, I think, who was at Google around that time, it was a career changer. Like it was, and the vast majority of that experience very good. I was there for 6.5 years. Now that I'm in the earlier stage world, though, like I look back and think sometimes it's not the best place to learn about business sometimes. I mean, the great thing about being at Google at a time like that is that you see what can go right if you get the big things right. And but especially those few years, kind of mid 2000s, before Facebook came on the scene and there was real competition and that kind of thing, just learning about business there was like learning about gravity on the moon. You just, things don't behave like that anywhere else. But anyway, it was an amazing experience. Then I went to Twitter in the very early days. So when Twitter was not doing any revenue really outside the US. I was one of the first international employees. I became vice president of EMEA. I helped to build out the EMEA business from scratch there at Twitter. And then 4 years ago, I went to Frontline Ventures to get into venture. And so basically, kind of looking back on the Google Twitter experience, that was what led to some of the stuff that we're currently now doing in Frontline.
And why? I mean, obviously, you work being an engineer, working at Google, working at Twitter, then becoming a VC. Did you always want to become a VC? How did that happen? What's the story there?
I was always curious about VC. I wouldn't say I wanted to be an investor. That wasn't a career ambition at any point. What I expected was that I wanted to go to something smaller, and I always enjoyed the earlier stages of growth. So Google and Twitter obviously became very big ultimately, but the times that I enjoyed most was probably when both companies were smaller. And so I was always going in that direction. I was likely to go to a smaller company, a VC-backed company. I suppose I presumed it would be on the operating side, but started doing a little bit of work. I knew the founding partners of Frontline pretty well, and even when I was at Twitter, we interacted a lot. And so, it just became a natural step to take. And so Frontline kind of does two things. We've got offices in London and Dublin. We do seed investing in Europe. Now we actually do later stage investing in the US, which I can talk about. But when I joined first, it was seed investing in Europe.
Yeah, well, I mean, why don't we touch that? Because I know Frontline well, and been involved at SaaStock conferences sort of over the years, and say really known Frontline as this a very focused B2B sort of SaaS seed stage, investor. But now, as you say, you branched out and doing later stage investing in the US. Why not early stage investing in the US? Why later stage? Curious about that.
It's linked in large part to the experience that I talked about a few minutes ago there at Google and Twitter. So what I saw from the inside there, although I joined Google in the US and then moved back to Europe, I spent basically a decade at both those companies in Europe. And so I saw from the inside how even the best US companies expand internationally. And so really two things were most noticeable. There was the opportunity of the outside the US. Like Google at one point was getting 40% of its revenue from Europe, Middle East, and Africa. It was really enormous. And then the second part was just the avoidable mistakes that even the best companies make when they go outside. So I had seen that firsthand. I knew it was true, and I knew that despite having the best investors in the world in the US, that those companies were still making those kind of mistakes. And so we had this conviction that no matter how good you are in the US, that just the nature of growing up as a successful company in the US means that you will have certain blind spots when you go international. And that we might be well placed, being based in London and Dublin, having operating experience in-house to help out. So that was really the idea behind it. What links the two sides of Frontline, the seed investing side and the growth investing side, is it's B2B software and transatlantic. Because actually, even though the two sound quite different, early stage and growth stage. Doing early stage in Europe, one of the things that you end up doing quite early is you end up helping companies, especially in B2B, expand into the US. And that's exactly what we're doing with the growth stage companies. So in fact, there's quite a lot of similarity, even though, of course, the US ones tend to be 4 or 5 years ahead in maturity terms.
What does a B2B SaaS startup need to have somebody like Frontline invest in them? What is your kind of thesis? What are you looking for?
The seed side or growth side? Yeah. I can talk about both. Yeah.
Yeah. Why not both?
Yeah. I mean, I suppose what's in common across the two is we're looking for really ambitious founders with global aspirations, and we invest across B2B, so we're generalists in that sense. And usually we're looking for some sort of technical differentiation again. But I think in Europe, the global aspiration part is not something that every founder has. And funnily enough, despite the success of so many businesses in the US, that's also true in the US. That you can build a very big business, of course, just focus on the US, and not every founder really wants to go that next step to, I think, fulfill the true global potential of the company. Now, a crucial difference between the two funds is in seed in Europe, we lead at seed. We're usually the first institutional investors in, and we'll be very hands-on, helping in the product market fit stage of companies' development. We go on the board usually. In the US, it's a very different structure. We're obviously a small player. We participate in rounds. We don't lead them. The rounds are usually led by top-tier US investors, and then we participate in a Series B, C, or D, and then we just get very hands-on involved in helping them expand into Europe. And so one of the things we did was we noticed that we were missing data when it came to advising these US companies. The advice that we were giving was based on real experience, our own personal experience. Two of the partners in Frontline have experience helping US companies expand internationally, and then also all the interviews that we had done with our former peers and friends and execs in the industry. But we were missing data. That data is kind of hard to come by. So anyway, we went through a fairly laborious process over the last couple of months of compiling a useful data set, and we analyzed how 175 companies have expanded from the US over the last decade. And we published a report on that last week. So there's some good stuff in there, which just makes it a little bit more quantitative in terms of the pattern that these expansions tend to follow.
Yeah, I want to jump into that report in a second. But one thing that you mentioned, and it's a sort of a commonality in terms of a question that I often get from VCs when they're coming to SaaStock or when they're coming to Europe, and they say, Alex, like, who are the exceptional founders, out there, in Europe, right? Or at SaaStock today, right? And I find that a very difficult one to answer, just because typically, I mean, say you have, like we did last year, 3,000 attendees at SaaStock. I mean, I don't know most of them, first of all. I may know some of the companies. If I ever speak to the founders, it's often very fleeting, it can be 10 minutes or so. And very difficult for me to kind of make that judgment, are they exceptional or not? Because I mean, I like everybody, but that's not a mark of, who is exceptional. So when I kind of get that asked that question, I almost find it difficult to answer. How do you, mark, like, or understand, like, if this founder is exceptional or not? Because I guess initially within the process, you're viewing decks, and maybe these are first-time founders, and like, what is the triggers to say, like, maybe this person's got something, or can you only find that when you're having a conversation, when you're meeting them face to face? Is that when you know? How do you know?
That's a tough question to answer, because I think if it were easy to kind of algorithmically solve that, it would have been done already, and it's just not. One thing that I did notice, moving from being an operator to being a VC, one of the transferable skills I thought I would have would be ability to assess people. Because I've been leading teams for a long time and all that, and you're hiring people all the time and you're seeing them perform. But one thing that I noticed in VC was even that ability to assess. While I think it is transferable in the medium term, I had to recalibrate what I was looking for when I moved into early stage investing, certainly, because the kind of skills that you're looking for in, let's say, a vice president of a VP of sales at a public company, it's just very, very different to what you're looking for in a founder. The one clear difference that I noticed in the first while in seed investing was the importance of vision. That there are a lot of very, very capable operators who can build exceptional, very top of organizations, who actually don't really have an unusual kind of vision of the future that's different to what they see around today. Whereas in early stage investing, that was the thing that I noticed in the first year. If the founder you were talking to didn't have that clarity of vision, then there was sort of nothing else to grab onto. I'd say it's even a little bit different at times when you're looking at growth stage companies. And again, I've been doing VC for 4 years, so I want to be humble about this. There are people who've been doing it for decades and still don't have the answers to these things. But at growth stage companies, probably in order to get to that point, they needed to have that clarity of vision too. But then plenty of companies go awry at 10 million ARR, 20 million ARR, and there are some CEOs who I think seem to be able to scale themselves from that point because they want to build an organization underneath them that isn't as dependent on them as maybe the early stage organization was. So probably I need to recalibrate again when I'm assessing growth stage founders. It's about company building at that point rather than product building. So
this report, the 2020 Global Ambition Report, you mentioned 170 companies surveyed, all B2B SaaS?
All B2B software, not necessarily all SaaS, yeah.
What were some of the kind of key findings here that's I guess going to be interesting for the audience, and then we can sort of link to where people can find the report?
Yeah, I'll pick out the things that I found surprising, because there's a lot of sort of maybe predictable stuff too, but a few things that I found surprising. One, on hiring, about almost half of companies that landed in Europe got their first senior hire wrong, meaning they left within 2 years. And so that's definitely higher than I expected. That's a higher failure rate than you would usually have at C-level in the US or even VP level at the US. And it's particularly problematic when you're expanding into Europe because you're 8 or 5 time zones away from headquarters. There may be no other senior employees around. You get that first person wrong, and you may need to reboot the whole organization. So that was a pretty big one. There are a number of reasons I think why that happens, but anyway, that's the fact. A second thing that I thought was interesting was surprising to me, despite the fact that I've talked to, really dozens of companies that have done this. About 40% of expansions over the last 10 years have been led by product and engineering rather than by sales. And so I think that the normal narrative is that US companies come to Europe for customers and for revenue. And while that is true, there's a large minority that are coming for engineering and product. And actually that's increasing over time. I think what's going to happen after COVID will maybe increase that further. But it turns out there's quite a deep pool of product and engineering expertise now being built up in multiple cities around Europe. That wasn't the case 10 years ago. Third one, the locations. So the cities that these companies, they're all VC backed, high growth companies, the cities that they end up landing in. Maybe it wasn't surprising to me. I mean, London, Dublin, and Amsterdam are the three most common. Those three are becoming more popular over time, and classic network effects to do with cities. Maybe that's not surprising. London has a good lead on its own. Like, it's number one by a good distance in B2B software, and that's maybe a little bit different in when you look at, say, just employment created over time. Sometimes the really, really big companies end up choosing, say, a Dublin as well, or an Amsterdam as well. But anyway, as a first location, London's number one. And then another, I think, really interesting thing that we found was the impact of Brexit. Because I had never seen any data, at least not in our sector, about what happened after the referendum. Did it affect the way that companies expanded? And it turned out it did.
What is it that I mean, Dublin being a relatively small city compared to some of its European sort of competitors, what is it that Dublin has to attract all these kind of tech giants and the scale ups and the venture backed companies?
I think apart from Grogan's, you'd fly 10 hours for Grogan's, all right. What Dublin has changed over the last decade. I would say the same is true for Amsterdam, more than what London has. And what London has is biggest city in Europe, all the obvious stuff, proximity to customers and just depth of talent and all those kinds of things, as well as English speaking and all that. Places like Dublin and Amsterdam, just being smaller cities, had to fight harder to get into even the second tier. I think both countries used 10, 15, 20, 30 years ago, used corporate tax as a way to give themselves an advantage against bigger countries. In the last 10 years, I would say that tax advantage has become, it's become smaller and it's become less relevant. So I probably talk to 50 US CEOs a year who are thinking about international expansion. Tax never comes up, literally never comes up. So that can't be a differentiator anymore. What has happened over the last 10 years is just the depth of talent pools has become more attractive. So just simply the fact that Google located in Dublin, and then Facebook, and then LinkedIn and all that kind of stuff, just generates sort of pool of talent. Some of it was brought up in the city, some of which was transferred in. Same in Amsterdam. I think it happened a little bit later, but like Uber locating there, Netflix locating there, that gave a reference cell to the next company coming over. They all attracted talent into the cities that then recirculate into the next kind of company. So that's what got them in there. And it's those talent networks, I think, which make it harder for other cities that otherwise are very attractive, like a Paris or a Stockholm or Berlin. It makes it harder for them to get into that first tier, at least for US companies coming in.
So the report, where can people find it, download it, or how do they access it?
You can go onto our website, frontline.vc, and you'll see the two sides of Frontline Seed and Frontline X. And if you just go into Frontline X, you'll see a link to the report. So the Brexit thing that I mentioned was pretty interesting too. So I suppose what I expected was that there'd be a bit of a drop off of expansions probably to the UK, and then maybe it would come back up again, and maybe it wouldn't be, the other countries in Europe wouldn't be affected that much. But what we actually saw was quite different to that. So at least in B2B software, we saw a pretty big drop off in expansions after the referendum, so mid 2016. And it was like a 60% drop off in new landings. It didn't just affect the UK, it affected all of Europe. So every place in Europe was impacted, and it pretty much stayed. I mean, it really didn't bounce back. But then the second part of the story was, we looked at what US companies that were already in Europe did. So were they affected? Because that would say more about what the conditions on the ground were really like. And they weren't affected at all. I mean, there was a very minor sort of drop in new hiring in the UK immediately after the referendum. Just people were kind of trying to figure out what was going on. But then all US companies in Europe just continued to hire like crazy. And so what that says to me is, one, the conditions on the ground really didn't change, but the perception in the US was that they had changed. That CEOs in the US were most likely, from a distance, reading headlines and got a bit spooked. And the problem with that is that the opportunity is still enormous, right? Like 30% of these companies' global revenue should be coming from Europe, and if you postpone that expansion by a year or two, you're foregoing quite a lot of revenue, and you're opening the door to copycat competitors in Europe. So that was a pretty interesting finding.
What are you seeing because of COVID, the sort of impact, let's say, sort of in SaaS, and again, maybe in the early stage? How are SaaS startups being impacted? Obviously, we're seeing some winners coming or benefiting from COVID, right? The Zooms and the Shopifys and so on, right? Benefiting, not that they ever wanted COVID to happen, but certainly there seems to be, SaaS seems to be in general performing quite well despite this, very difficult and uncertain sort of market. But at that early stage, is that still true? What are you seeing there?
If you were to compare B2B SaaS startups to startups in other sectors, I think it's for a lot of kind of obvious reasons, though the business models are just more robust. But if you're an early stage company, you're probably operating on no more than a year's cash runway. And so any company that's only got a year's cash runway, or even 18 months with a global recession ahead, has got to be a bit worried. In the growth stage companies in the US that we deal with just tend to, by the nature of the kind of companies that we've gone after, like we've invested in Trip Actions and People.ai and Clearbank and Lattice, like they have strong balance sheets, they've raised a lot of money, they're category leaders, they can get through this stuff. For early stage companies, it's definitely a bit more dangerous. What we were trying to think about was, especially for these US companies expanding into Europe and elsewhere, we were trying to think about what are the likely medium or longer term impacts of COVID. So setting aside just the effect that a global recession has on everybody, or kind of assuming that these companies will survive the short-term stuff, what changes in the way that a company expands internationally? And so these are guesses at this point, because basically most companies that postponed things like international expansions, right? They just went into triage mode, and if they were planning to go in Q1, they'll go in Q4 instead. So we haven't seen many examples of this yet, but what I would expect to see is, I'd expect to see more product and engineering led expansions, because a lot of companies had already been experimenting with distributed engineering workforces because of the Bay Area bottleneck and all that. Stripe has this multi-hub model where Seattle and Bay Area, Dublin and Singapore, and then I think they have this fifth hub for the last few years, which is remote. And so many companies have been experimenting with this for a while, and a lot of companies are going to get more comfortable with that over the next 6 months or longer. So I would expect to see more product and engineering led expansions to Europe. And then on the sales led expansions, it kind of depends on what buyers do. So if the reason why, one of the big reasons for locating in a London, for example, or a Paris is you want to be close to, or Hamburg is that you want to be close to large customers, especially if you're selling enterprise deals. If large customers become more comfortable buying remotely by video, then that will probably have an impact on the way that companies expand into Europe, where they locate, the relative importance of hub offices versus local field offices. So yeah, I think that probably will. I think you'll end up with a bit of a mixing of the old enterprise field sales model and inside sales too. Inside sales teams tend to be very, very numbers focused, but a bit transactional. They tend to hire kind of junior people straight out of college, that kind of stuff. Field sales is like the opposite in almost all those dimensions. And I think you'll end up getting a mix of the two. And there may be this development of a new kind of enterprise remote sales practice that ends up being done from hub offices like a London or a Dublin or an Amsterdam, and maybe local field offices around Europe will sort of suffer. That's a bit of a guess, but it could go that way.
Yeah, no, I mean, I'm seeing like, for me, the conversations that I'm having, and certainly because, we're still, going through COVID and things may change, in the future, perceptions may change. But a lot of people that were reliant on flying to their customers, delivering consultancy to their customers, selling in person, are now saying, like, we're just doing all of this. Like, we won't go back to doing that in person. We won't be going back and, getting on the plane and leaving the family, and so on. We're going to just stick with remote. And it seems pretty common right now. I don't know if people will start to kind of change, but again, we've all done it. And, I would fly, and it's not long haul, but, I would fly to Dublin for one meeting, right? Have that in person, but I could actually do that in Zoom, and that would take me a whole day, out from the office. I'm still working because you have your mobile, you have the phone, etc. So you're not losing a day's work, but still, that the need to kind of be there and have that sales meeting in person, perhaps that really is going to dissipate.
Yeah, it's hard to see that not being a permanent change, because there are two self-reinforcing tailwinds. One is the economics of remote sales are just so far superior that there'll be a business imperative. And then secondly, just the personal toll that those kind of one-day trips take on everybody. I think everybody's sort of woken up a little bit to that, and we'll find it a little bit harder to go back. Now, having said that, I think the only thing against that is that sort of incumbents benefit from this kind of situation where the relationships are already established. When you're new, when you're trying to break into a new region, you're trying to break into a new sector, your startup, whatever it is, there's no doubt that there is an advantage to having a face-to-face meeting for building that first relationship. So that's maybe the only counterpoint there. I wonder if partner sales plays a bigger or smaller role in a situation like that, where a partner who already has those established relationships could then become an important additional channel for a startup that otherwise would find it a little bit harder and more time consuming to build the initial relationship.
Final question. I know we've come up to the sort of end of time. Always ask our guests before they leave how they stay healthy and sane. What's your way?
Stay out of Grogan's. Yeah. Well, I made a pretty big change to my morning rituals about 4 years ago. When I left Twitter and I went to Frontline, and it was transformative. So I've always been a morning person, and because of that, he's always got up early, but I always used to go to work early. So I just thought it was the most productive time of my day. And so I would get up, and even after I had young kids at the start, I'd be gone by 7:30. And I changed that to sort of getting up early, exercising for an hour, and then having breakfast with my kids in the morning. It sounds like a small change, but it was kind of a double whammy where I was getting exercise early in the day, and then I was also, the kind of habit was being reinforced by just getting the kind of bonus of breakfast with my kids. And that's been a life changer for me, I have to say. Like, the downside is you start work a little bit later. Upside is you start work happy. I mean, it's great.
Those emails can wait. Those Slack messages.
Absolutely. Can wait. I mean, all you're doing is actually only changing a half an hour, and my start date changes the way that my day goes.
Yeah, absolutely. Well, Stephen, thanks so much for being a guest on the SaaS Revolution Show. We'll hopefully see you either at Grogan's or at SaaStock, probably SaaStock 21. That's when we're back in Dublin, and look forward to that.
Sounds good, Alex. Thank you.